Hi, welcome to Life Health Exam Coach. My name is Chris. I'm your Life Health Exam Coach. And if you haven't checked us out already, please do look us up on lifehealthexamcoach.com. We have a guarantee there to help you to pass your exam. And we've got lots of great content. Today, we're going to be covering long-term care insurance. And usually there are some questions about this on the health portion of the exam. So let's jump into this topic. First off, let's define what long-term care is. Now, it's usually nursing home care, which is also known as custodial care. So it provides care for people who can no longer do what are called the activities of daily living, and that's an official term that's used in the industry. They can't do activities of daily living, also known as ADLs, on their own. And those activities include, or really are, defined by eating, bathing, toileting, transferring, and ambulating, which is a fancy way of saying, being able to get up and walk around, move around yourself, getting dressed, and also personal hygiene. So these are the things that, once a person can't do several of those, then they're going to qualify for long-term care, and long-term care insurance then can begin. And that's what we're going to talk about today. So the long-term care insurance helps cover the cost. It is a private insurance policy. You pay a premium for it once you start that policy. And just like any other insurance, oftentimes, people are starting these policies as early as in their 30s and 40s. They can start them later, but of course, the closer you are, the older you are, the more expensive the premium is to cover long-term care. For most people, long-term care is something that happens in later stages of life, and it's pretty costly. So having insurance to help cover that cost can be very helpful and meaningful to your clients. Now, an LTC, by the way, is an abbreviation of long-term care. Now, it is not considered health insurance because you're not covering health per se. You're covering the person's inability to basically take care of themselves on their own. So again, the coverage starts, that long-term care insurance is triggered, meaning it would begin when a person's unable to do 2 to 3 of those ADLs. And that would be defined by the policy, but it's pretty consistent in the industry, meaning that when somebody can't do 2 or 3 of those fundamental things you need to be able to take care of yourself, then they're going to qualify for long-term care insurance. So let's talk about what long-term care insurance covers and also how. So the benefits need to cover at least 12 months of care. So that's kind of the thing with long-term care. It's not short-term nursing, it's longer term. So these policies are designed for when a person has a greater need than sort of short-term care. This this kind of plan has also an elimination period. We have a different video on elimination period, but it is or means a period of time that you would have to continue to pay for care before the policy begins to pay. It's often the first month of care or so. You can think of that as being sort of like a deductible. And the longer you make that period, of course, the lower your premiums would be because you're covering more of the costs the longer that elimination period is. So it's a way of saying, hey, I can cover a certain amount before I need my insurance to kick in. So the policy covers different kinds of care options. There are different ways and places a person can receive long-term care. One very common way or place is a skilled nursing care. It's round-the-clock medical care, and some people need that level of care. Now, that would mean that they have some sort of illness going on usually, as well as simply not being able to take care of some of those activities of daily living. Intermediate care is another common sort of definition of care where they might need occasional medical care, but generally their problem isn't illness, it's simply not being able to take care of themselves anymore. Home health care is another option where the person stays in their home and a home health care worker would come in and help with those activities of daily living. Custodial care is purely nursing care. It's ADL help and it's non-medical. So if you go into an institution that has custodial care, they are not going to be taking care of illness. They're literally going to just be supporting your day-to-day activities to help people to be able to function in those stages of life. Adult daycare is another option. That's where it's more part-time. It's not overnight. The family member would bring the person who needs that care to the adult daycare to be looked after during the day, and then they would pick them up and bring them home and take care of them during the evening. So of course, since it's not overnight, that's usually a lower cost. Respite care, you should be familiar with that term. This is the only sort of insurance that covers respite. And what that means is, it's a lot of work to take care of somebody. A lot of folks in this country who can't afford long-term care for their loved ones actually are taking care of them in their home. That takes a lot of energy and work. Even if you are insured, if say you're doing adult daycare and you're still taking care of your parent part-time, respite care is a provision in the policy that enables you to get a break, basically to be covered for somebody to take some of those overnights, give you a break. Basically, the caregiver in the family gets a break and gets some coverage. So that's different. It's really something that's unique to long-term care insurance. So again, respite care is for the caregiver to be able to take a break and have some of those costs covered. So let's talk about how long-term care insurance pays. The policy usually pays out on a per day amount. So custodial cares, nursing home, nursing care homes often have like a per day fee. So the long-term care insurance will also pay out on a per day basis, per day that the person is in care. Let's say an example, the policy pays $250 per day. The bill is only $150 per day, but they still receive that full $250. So, that's a nice thing about these since they're paying per day. Now, the reverse could happen too, where maybe the bill is actually higher than the per day amount that long-term care policy covers, then the policy owner or the family would be responsible for the difference. So that's how it pays out. Now, some policies offer what's called inflation protection. It's often offered as a rider, sort of an additional choice option that you have on these policies to cover future costs. Imagine if you were getting long-term care insurance and you were only 50 years old and you're projecting you're probably not going to need it until you're maybe in your 80s or beyond. Of course, costs are going to go up in those next 30 years. So it is wise, and often people realize it's a good idea to be covered for those future costs. So to build in some inflation protection. So for example, the policy pays $250 per day, as the terms and conditions imply. And you add that inflation protection, it could increase the coverage by 5% per year, so that in 30 years, the policy is going to be paying 5% per year more, added on to that $250 per day to help cover the true costs that are going to be there 30 years later, or however many years before you need it. Some other features of long-term care: the protections are in place to make sure the policy does not lapse. So there are non-forfeiture options that are available. And this is a concern for people who get long-term care insurance. What if it becomes unaffordable for them at some future point? Are they going to lose what they've put in? So there are non-forfeiture options that are available on these policies to protect against that. Also, marketing is regulated in this industry to prevent fraud. Of course, seniors are a target for fraudulent practices, so marketing is regulated to help protect seniors from fraud. Health physicals could be required to qualify for coverage. Just like life insurance, the long-term care insurance carriers are taking on the risk. So it makes sense that they're able to underwrite or, check out the health of the person that they're covering before they agree to cover that risk. So health physicals can be required by carriers to qualify for this kind of coverage. All right, let's recap. What do you need to remember in all of this information for the exam? First off, remember long-term care insurance is private insurance. It's offered by insurance carriers, and it's designed to cover the costs of nursing care predominantly. ADLs, you might see that term on the exam. Remember that it stands for activities of daily living. Mainly, you need to remember that it is, those things that a person may fail to be able to do that will qualify them for long-term care, like bathing, toileting, transferring, being able to get up and take care of themselves. If a person can't do two or three from that list, then they're going to qualify for their long-term care insurance to start. Long-term care coverage can cover a variety of care options in different settings, like nursing homes, we talked about daycare, home care. All of those settings can be covered by a long-term care insurance policy. There is variance between them, but they're all possible things to be covered by this kind of insurance. The coverage also includes various options, including inflation riders to hedge against inflation, non-forfeiture options so that people don't lose what they've invested into this policy, and different cost amounts, different premium levels that are affordable, most affordable for people. Finally, remember this industry is protected to protect seniors. So that's it for long-term care insurance. I think this short review is going to help you when you tackle questions about it on the exam. Remember, we do have a lot of other content, so check us out at lifehealthexamcoach.com so you can get access to everything that you need to know to pass your life and health exam. Thanks for listening today, and we'll see you in another video.